Now, more than ever, we need to focus on stories of strength, courage, and unity. Welcome to COVID Talks, a series dedicated to promoting positive conversations during uncertain times.
Good evening, everyone. Thanks for tuning in. Welcome to our 20th episode of COVID Talks, Positive Conversations During Uncertain Times. My name is Anthony Rapp of PRcision. I'll be your host for the evening. And once again, for those watching us live, thank you for tuning in. I ask you to do me a small favor. Go to the bottom, click the share button, and share this post to your personal feed if you'd be so kind. For those of you listening via podcast, thank you for downloading the podcast. We appreciate you being with us. So tonight we have a great guest. We have Michael Scarimbolo, branch manager of First Home Bank, in addition to a COVID Talks exclusive, because he and his team have been working diligently to put together a package specifically for first responders. So he's going to talk about the package that is going to be revealed for the first time anywhere here with you tonight. And secondly, he has answers to some great questions that I know personally I've had, and I'm sure many of you watching and listening have had as well, related to forbearance of mortgage and credit score, all these things that are related to the current climate that we're facing right now. So we hope that you ask Mike some great questions when that portion of the segment comes up. But for now, we're going to get right into our headlines of the day, our positive news headlines of the day. So New York City is going to start issuing marriage licenses online next week for the first time in the city's history. It's going to be called Project Cupid. So while that may be great, I'm sure there are many divorce lawyers out there licking their chops because they know that the more are issued, unfortunately, the bigger problems we're going to have. Bad enough getting married in person. Now we're going to let people do it online. So I don't know if it's good news, but in any event, it is current and it is news. Second headline of the day, a local Staten Island nonprofit called Projectivity put together a very nice project to thank Staten Island's first responders at Staten Island University Hospital. And they painted this beautiful mural, which you can see here. It's 75 foot long, and it is located at Princess Bay. And again, great effort put together by our creative community. A lot of times we forget the work and effort that goes into something as tremendous as this. So it's a huge salute to all of our first responders and medical heroes. And we thank the island-based Projectivity nonprofit for putting that together for us. And our last positive news headline of the day. So as we all know, we've even discussed it here on COVID Talks. We know that graduation is coming fast for, unfortunately, seniors around the country and around the world who are probably not going to have an in-person graduation. So what Facebook has done is Facebook has created the hashtag graduation 2020 campaign. And what they're going to do is on May 15th at 2 p.m., they're going to invite all members of the class of 2020 to tune into a live stream. The live stream is going to have celebrities such as Oprah, a multitude of people. So it's a great way, shout out to Facebook for doing the right thing. Very nice way for people for these kids to have something to look forward to. Again, nothing's going to replace the traditional graduation and walk down the aisle, but it's just something positive that these kids are going to be able to do. So shout out to Facebook and we salute you. All right. So a quick PSA. You're interested in learning more about us, follow us at COVID Talk. Check us out on the website at covid-talks.com. Subscribe to our YouTube channel at COVID Talks. And again, download the podcast at iTunes or Spotify, the COVID Talks podcast. If you're interested in being a guest or you have a topic you'd like us to discuss here on the show, we have no problem getting you on or getting your topic discussed. It'd be our pleasure. Shoot us an email at info@prcision.com. We'll get you up, we'll get you in, and we'll get going. And a quick reminder, we want you to tune in tomorrow night. Tomorrow night, we're going to be joined by Staten Island's own Renee Sarno of the company Yaymaker. And since this whole coronavirus and quarantine has begun, Yaymaker and Renee Sarno have been making huge moves in the event industry. Everything from at-home painting, at-home do-it-yourself kits, all done virtually, all offering people something to do at home together with their family and with their friends. So we're excited to have her on tomorrow night to tell us what she's up to, what's available, and what's available for us virtually to do to entertain ourselves. And finally, we have confirmed, we're very excited. We heard from Linda Barron's people over at the Staten Island Chamber of Commerce. We are honored. It's a great privilege to have the president of the Staten Island Chamber of Commerce with us next Wednesday. So next Wednesday night at 7 p.m., I encourage you to tune in. Linda's going to be answering some questions about the state of the borough, talking about all the great things that the Chamber of Commerce is offering right now, offering for free, even for non-members, to help get through the current situation. So we thank her for being on the show. We look forward to it, and we invite you to tune in next week at 7 p.m. All right. So right now, there's tons and tons of information out there, right? There's, every day you're getting an email, every day you're getting a text message, every day you're seeing on the media, here's a way to help. And then 20 minutes later, you're getting another text, another email, another media clip that says, actually, that wasn't right. Especially when it comes to the home industry. So we all know about the ability for forgiveness of your mortgage for up to 3 months. And it seems at first glance like something that's worthwhile doing. So one of the things that Mike Scarimbolo, our guest, is going to discuss is what are the ins and outs of that? What does it look like? How does it play out long term? Also, as I mentioned earlier, he's going to be announcing a very special, very exclusive deal for first responders who are interested in purchasing a home. So we're excited to have him tell you that. And without further ado, I now introduce Michael Scarimbolo, branch manager of First Home Loan Bank, and also the immediate past president of Staten Island's prestigious Executive Club of Staten Island. And just so you know, Mike is licensed in all 50 states to do business, and we're happy to have him with us. So Mike, you there, brother?
Hey, buddy. How are you? How are you, Anthony?
Awesome. All right. So we know everything works. We're excited to have you. I thank you for coming on.
Thank you for having me.
So before we get into all the nuts and bolts and the amazing announcement that you have that you're going to make here exclusively on COVID Talks, let's just give people general background. Tell us about your background, where you grew up, what you were involved in, and we'll take it from there.
Yeah. So again, thanks for having me on the Facebook Live here on your show. I've been watching it, so you're doing a great job putting some good content out there to all Staten Islanders and everyone else included. Again, Mike Scarimbolo. I'm with First Home Bank. We're a licensed mortgage lending institution. We are located here, 6276 Amboy Road in Staten Island, New York. That's the branch that I run here in Staten Island. We are a licensed mortgage lending institution in all 50 states. So it's not just locally here for Staten Island. We can handle loans, again, in all 50 states. How did I get into the business? How long am I in the business? I look like I'm younger than I am, but 40 years old, but started out at a very young age. At 22, coming out of college, 9/11 had happened. And, unfortunately, it was tough finding a job after 9/11. So a friend of mine got into the mortgage industry and, started telling me about it. And I decided to jump in. So at 22 years old, I jumped into the mortgage industry at a company called Mortgage IT in Manhattan. And I've been in the industry ever since. I learned a lot. I've seen the highs. I've seen the lows of 2008. And again, where we're at today with COVID-19, unfortunately, we hit another low. But the industry's been great to me. I made a lot of friends. And the knowledge that it put forth in me, to put out to all my clients, and the new knowledge I gain on a daily basis is fantastic. I love the business. I love helping clients achieve the American dream, which we're going to talk about later as well. But that's my background.
So you do have the baby face. You're right.
Yeah.
In fact, when I first met you, I thought you were a lot younger than I am, but admittedly, I look a lot older than you do because these aren't highway miles. But you do. You look great. You got the baby face, so enjoy it.
Listen, I hope it lasts, man.
So, given your extensive background, I know right now, even though the world is on lockdown, there still are deals going on. There's stuff going on behind the scenes. So, what are you doing right now, and how are you dealing with clients, and how have you changed the way you're doing business currently?
So luckily, the industry a few years back started to get into electronic signatures, electronic documents. We went more the electronic way. When I started out in the business, it was all paper files. I mean, geez, the files were this thick, right? So, and then you're scanning and overnighting packages to underwriting staff and various banks for that matter. That has gone, right? So everything is all electronically. From the last 5-6 years, if you want to say. So we got ahead of that, and where we're at today, where we all can't meet face to face. I mean, it's huge. So that's been helpful. All the disclosures that the clients are signing are all done electronically via the web, secure portals. That's also helpful. And a lot of clients have moved on with technology themselves, right? Yeah. You still have those clients that still want to meet face to face. Unfortunately, that's not happening, Anthony, any longer for the time being. But a lot of clients do have printers and scanners at home where, and maybe even fax machines where, they're able to get documents over to us. So the transition, for us coming out of the office once the lockdowns happened in New York City, to us working from home, which is, as you can see, working from home on a daily basis, we are still able to move things along in our industry, luckily.
So that's, from an industry standpoint, that's great to hear that things are still moving along. It's positive to get out there that things can still happen. So let's take a step back. Let's talk about it from a more granular thing. So have regulations changed? I mean, the way business has changed is still moving forward, but have there been any changes to guidelines, changes to regulations, all these things that as a buyer, homeowner, that we need to know? What's changed?
Yeah, so great question. And I just want to touch upon one thing, just touching base on, you just brought something to my mind. Not only are we working from home, but the First Home Bank staff is all working from home, from underwriters to openers to closers. Don't get me wrong, there might be some people that have to get to the office to fund loans, but we are funding loans on a daily basis, 5 days a week. We haven't stopped closing loans. So I just want to put that out there because, the industry is still moving along as COVID-19 is here. So to answer your question, and thanks for that, there has been, changes in guidelines. And, I want to bring about some of those changes today. And with that, there's a lot of uncertainty in the market, and there's a lot of uncertainty in everything that we're doing, in everyone's job and everyone's life, right? But in the lending aspect, there's a lot of uncertainty to do with all in conjunction with the forbearances that are happening, that they set forth for, all consumers to allow to not make mortgage payments for the next 3 months, whenever that particular month starts. We're going to get into that in a few. So some of the guideline changes that happen as the lenders are getting worried about people losing their jobs for a longer period of time, not being able to make their mortgage payments for a longer period of time. They're forecasting, as we see models of, who's getting COVID and where this curve is going up and down in terms of the virus. They're projecting and doing their own models for the lending institution, right? So they're trying to get ahead of what might come about. And with that, there has been changes with guidelines such as conventional or Fannie Mae, Freddie Mac. They increased their credit score criteria slightly. So you're seeing a slight increase from a 620 to a 640 FICO score for some lending institutions out there. They're also requiring you to have reserves in the bank. Why? I mean, in the past they didn't. Right. It makes sense that they want to do that. If you're not able to make your mortgage payment as they fund your loan today, in the next month or so, God forbid you lost your job, they want to make sure that you can cover that mortgage payment for the next 3 months. So they're looking for 3 months reserves, for you to have in the bank. And that's a conventional.
And not to cut you off, but I think from a business standpoint, as a bank, because don't forget they're a business as well. Mm-hmm. I think it impedes the process, right? It makes it more difficult, but from their standpoint, I think that's only fair that they would even require that.
And I would agree 100%. And Anthony, not only is it fair for the lending aspect, but as a consumer, what I was going to talk about in a few is, and I just bring some of it up now, it's smart to have these reserves in the bank, right? You want to be able to prepare for worst case scenario. And who knew this was coming? And who was prepared for what we're all experiencing right now? If you tell me one person that was ready for this, I don't think anybody was, right? So, having those reserves as a consumer, is smart to have anyway, going into a financial transaction such as obtaining a mortgage.
So they've changed guidelines a little bit.
And that's one guideline. And the other guideline quickly is the government loans, right? FHA, VA. Those are government loans that the government purchases from the lending institutions. That changed a little bit more drastically. The credit score criteria increased from a 580 to a 660 FICO score. So they're looking for significant. It's a significant change. And unfortunately, that's the case right now. Do I think it's going to be short term? My gut's telling me to tell you and all the viewers out there, I think it's going to be short term, 3-6 months. But at the same token, they're also looking for reserves for those individuals as well. Why the drastic change on the FHA VA? They might be more prone with a less down payment, lesser of a down payment, a higher loan to value. They borrowed more against their house, So the concern is if they do lose their job and house values may come down a tinge. If they even do, some projecting they do or they're not, we don't know. I hope they don't too, but we don't know. But
right.
the lending institutions just want to get ahead of any foreclosures, late payments, people not being able to afford their mortgage moving forward. So they're just trying to get ahead of what might come. Will this change? I think it will. 2008, we had a little blimp in the radar. Don't get me wrong. We had a financial crisis, but lending wise, they picked back up after, 6, 12 months. So I just think this is going to be a short-term thing.
Well, good, because again, even though it is inconvenient, right? I mean, thankfully I have my home and I'm okay, but it is an inconvenience to get, the increased credit score, all that is a pain. But again, from their standpoint, they got to protect themselves somewhat. Otherwise you have this bubble that we're all too familiar with. So guidelines have changed, and thank you for sharing those guidelines. I'm sure there's people who are watching right now and be listening later that didn't know those guidelines changed. But all that being said, how do you feel about, is it a good time to refinance? Is it a good time to make a new purchase? I mean, so all these things going on, in your opinion, because I know, everything is an opinion, but in your opinion, is it a good time to look at a refi if I own my home like I do? If I was interested in a purchase, is it a good time to maybe work my way around whatever is going to become the new way of purchasing a home to get into a home?
Yeah, I mean, great question. We don't have that crystal ball, but what we do know is that home ownership is something that everyone still wants today, right? So it is the American dream. So having said that, someone that owns their home right now and is in an interest rate above 4%, I think it's a very smart move to refinance. Why? Okay. Rates right now, depending on product, could be as low as 2.875 on a 15-year fixed, all the way up to maybe 3.25%, 3.5%, 20, 30-year fixed, in that range. So they're in the low threes, if you want to say, for that matter. So if you are in the upper fours or in the fours period, you can reduce your interest rate by 1% or more. Great time to refinance. Saving money per month. You might be able to pull cash out. Cash out, you might see a little different in interest rate. There is a hit for cash out, everybody. So please do understand. But if you're just trying to change the rate, I want to go from 4.5 that I have now, and I want to reduce it down to a lower rate, no cash out whatsoever. You very much can lower your interest rate a full % or more by doing so, by refinancing, which will save you a couple $100 per month,
and that's real money in your pocket.
Real money in your pocket, man. It's real money in your pocket. And you know what else? I have a lot of clients right now that are refinancing, whoever, maybe 4.5, 4.375, whatever it may be, as an interest rate in the fours. Not only they are refinancing, but they're going from a 30-year fix that they took 2, 3, 4 years ago, 5 years ago, and they're dropping their term down to a 20-year fixed, reducing the life of the loan. Reducing the interest payments that you're paying back to the bank. I mean, heck, I was on the phone with a client this morning, $120,000 in interest payments for that particular client that they're saving, going from a 30 to a 20. That's your pocket. You know what I mean? That's interest that you're paying out of your own pocket. So it's definitely something to look into. And you asked about a purchase. Listen, nobody knows where these house values are going. You see so many projections on TV. The media is just the media. Nobody knows anything right now. Okay. At the end of the day, here's what we do know. What we do know, anybody was looking to purchase before COVID-19 is going to come out of this and say, I still want to purchase a home. They're looking to get out. Anyone that, that might be home right now, that, has the family and they're saying maybe the house is too small after being in tight quarters with the family over the last 45, 60 days. They might be saying, heck, I want to get into a bigger home. And those that are in a big home that might say, hey, listen, the family's all out and about. We have older kids or kids that are married and we want to downsize. We don't need this big home anymore. Those individuals may want to downsize, and that's not going to change their mindset, I think, coming out of this. I just don't think so. And that's just my opinion.
No, but that makes sense, because now you're dealing with variables that you weren't dealing with before. Everyone was out. The world was normal. Now you're in your house, and you could say to yourself, do I really need the East Wing?
Listen, and that's why I have headphones on. I got kids jumping up and down upstairs right now. So the only way I could hear you is if I keep these headphones in,
So that was a great point. And you touched on something that I want to bring up as well. So, as cliche as it may sound, I still believe this in my heart of hearts, that you're bringing people closer to the American dream, right? Even today, owning a home is the American dream. We were raised as young kids. You do this, you go to school, eventually you buy a house. It always seems that way. So does that make sense to you? Tell me what your feeling is, because I really think that, both your industry, the real estate industry, yep. I think you guys together, even like I said, it's cliche, it may sound cheesy, but at the end of the day, I think it's more than just a transaction. It's not transactional. If you were to get me the mortgage that got me the home that I'm raising my family in, that's serious. That's not, you're not selling me a piece of pizza here. So does that ring true? Do you have any experience?
I love pizza. As thin as I look, I'm a big, huge pizza fan. So, big time on that. But yeah, no, you nailed it. The American dream is owning a home. And, I'm proud to help my clients and any client that comes my way to achieve that American dream. You accumulate wealth by owning a home, period. Right. And where else can you accumulate wealth like you can owning a home within, as years go on, especially in the New York metro area, New York, New Jersey, Connecticut, for that matter, home values go up. Right. It's not like any other part of the country, California, of course, but in other parts, don't get me wrong, but for the most part, New York's values do increase at a more rapid pace, if you want to say. So you are accumulating wealth. You're able to pass that wealth on to your children. And build a better future for your children, down the road as well. And if you think about putting money in the stock market, right, and it's just another way to earn money. Right. Don't get me wrong, we have 401ks, we have IRAs, but look what happened to the stock market in one day in the beginning of March. What was it, March 2nd, I believe if it was. One day, 35% drop in the stock market. I mean, everyone's portfolio went down. Right. What do house values do during the COVID-19 right now? Right now, today. Right. And I'm not talking about what's going to happen in the future. Today, house values still up. So, and that's something that you can't take away from owning a home, and that wealth that you're able to accumulate is why it's the American dream. I'm happy to be a part of that. I know my realtor friends out there, they're all happy to be a part of helping clients achieve that American dream, me inclusive.
So maybe I don't feel as bad about the statement. Maybe it wasn't as cheesy as I thought, because you do agree with me. So good. You made me feel good because it wasn't cheesy and it was good.
Feel good.
It was a good comment to make.
It is a good comment to make. I agree.
So here's the big question.
What's up?
And I know you spoke about this exclusively to members of the executive club at our last meeting. We were thankful for it. Mm-hmm. I know that people, myself included, friends, family, everyone's talking about the program of forbearance for your mortgage for 3 months. There's probably more information out there than people can handle and absorb. And I realize that, it varies lender by lender. So I'm going to preface the comment with, I know that, and anyone watching or listening needs to understand that as well. But in your professional opinion, the nuts and bolts of it. So give us the ups. How does the program work? What could happen if you utilize it? And then more importantly, if you utilize it, what people aren't asking, and they're only asking right now, I think anyway, what happens 3 months from now? And then what happens 10 years from now when I want to get a new home or apply for a new mortgage? So walk us through that. I know that was a loaded question, but take us through the process.
I want the loaded question. It's a great question. It's a hot topic. I'm trying to do as much research on this as possible. And not only research, I'm seeing it firsthand, right? So, great question. The forbearance, the president, the governor, you're hearing that, excuse me, they're saying that you don't have to make mortgage payments for the next 3 months. While that's great for the consumer, unfortunately for all the mortgage lending institutions out there that are servicing your loan, a loan servicer is the institution that you're paying your mortgage through, whether it's Wells Fargo or NewRez or PennyMac or Bank of America, it doesn't make a difference. But that's who you're paying your mortgage through. That's your loan servicer. Those loan servicers, as you're not making mortgage payments, ladies and gentlemen, they have to still make payments on your behalf. There's still taxes that are due to the city and state of New York. and New Jersey and Connecticut and whatever it may be. There's still insurance that's due to State Farm and Allstate and Geico and whoever else your insurance company's with. Those payments still have to be made. Interest payments still have to be made. What's not knocking down is your principal. So as the forbearance agreements came about, and they stated that you didn't have to make your mortgage payment for the next 3 months to help those individuals during COVID-19. I'm just going to be real with everybody because that's just who I am as a person for those that know me. I just think where they went wrong was not putting any sort of, if you want to say, caveat to it that you had a loss of job. If you had a loss of job, then you were able to apply for a forbearance. And that would make sense, right? You don't have income coming in. You can't make your mortgage payment. We're going to let you skip the next 3 months and we'll get into part of that. But they let it happen for everybody and anybody. Matter of fact, they called it the honor system.
Yeah. Honor
system doesn't really work because everybody and their mother applied for the forbearance.
Right.
Matter of fact, I have a statistic for you. Since the middle of March 15th, forbearances are up 1,900%.
Wow.
1,900% since mid-March. And those numbers are increasing because people are still, unfortunately, losing jobs, as the weeks go on. Some companies might have hung on tight to see if they can still, pay payroll. And now, the New York is still down. New Jersey is still down. Connecticut, so on and so forth. So they have to do something in laying people off. Let's get into the forbearances because this is a hot loaded topic. So I have some information that I want to put to the viewers out there. Let me just say this. If you can make your mortgage payment, make it. Long term, it's going to be better for you all. If you are financially strapped, if you don't have your job, I completely understand. Go with the forbearance route. I have people that I know, clients, friends, they just did the forbearance. Why not? Let me just do it. Things are shut down. Even though I have the money, I'm still going to apply for the forbearance.
Right, because it seems like we're going to give this to you. Hey, do you not want to pay your mortgage? Who the hell's going to say they want to pay their mortgage?
I'll take that, right? But what happens is, Anthony, with that, right, as they're giving it to you, they're telling you various options. Very different lenders have different ways that they're going about this, right? So the lender's saying, we'll put it on the back end of the mortgage. Okay, great. Put it on the back end. That's awesome. Most lenders are saying, we're going to allow you to skip April, May, and June. Come July 1st, we want 4 mortgage payments in one shot.
And that's what most people don't realize. Everyone thinks it's option A that you said, including myself. I thought that was the deal. We'll put it on the back end. And in my mind, what the hell? So I'll pay it later.
Because that's what was put out there in the media again. So and unfortunately, each lending institution can't do that. They're financially strapped. Right. So at the end of the day, it's not a situation where that could be done. And some lending institutions, and I can tell you firsthand because I have clients sending me their forbearance agreements, having me read them and giving them advice on what to do. And a few clients of mine sent me theirs where the lender, not a big name bank, so I don't want to get through the name, but the lender basically said, we're going to research and get back to you to see and do some third-party checks to see if, in fact, that we're going to okay the forbearance. So what they're doing is with those third-party checks, you know what they're doing. They're checking to see if you're working right now.
Right.
Because if you're working, they're not going to give you the forbearance because they can't afford you not to pay.
Right.
So, ladies and gentlemen that are watching, here's what I want you to do. Each lending institution is going to have their own way to go about this. Read the fine print. It might be an hour to be on the phone with your lending institution. So call or don't call, but read those letters that you're getting mailed to you. You have to read into the fact if it changes your credit score, if they're going to report you late. Anthony, I want to get into that as well.
Yeah, I want to ask you that because
I want to get into that. We're going to leave that aside for 1 second. Read that. There's some institutions saying that they're going to report you late. That's crazy. You can't do that. You can't afford to do that. I'll explain why in a second. But one thing I want to tell everybody that are out there that's watching this, if in fact that you have done a forbearance already, and you think that you're going to obtain mortgage financing somewhere down the road, just know nobody has seen this before. We don't know if they're going to report you late. We hope they stay true to what they're doing.
Right.
But let's just say they don't report you late. When we go from a lending institution and you come to us for a new purchase, you come to us for a new refinance, and we find out that you're in forbearance and you want to refinance from your 4.75 rate to your 3.25 interest rate, but yet you're not making your mortgage payment because you're in forbearance, but yet you have the money to afford that payment.
Right.
Ladies and gentlemen, it's going to come up that you're in forbearance, which First Home Bank, wherever the logo is on this side, and any other lending institution is going to tell you, well, if you're in forbearance, that means you can't make your mortgage payment. And if you can't make your mortgage payment, we're not lending to you.
We're not going to give you money. Right.
Because you can't afford it. So you have to carefully decide on what you want to do, because this could affect you down the road.
So now go into the credit. So now you just debunked a myth, I mean, in my opinion, of what really could happen and what is not being said out there. But talk about now credit. So at some point, it just seemed, I mean, let's just make it very basic. You're never going to get away with not paying a bill, right? It is what it is. That's life.
Nothing's free.
So, right. That's just how it goes. So if your lender is one of the lenders you mentioned that they're going to make you pay 4 months on the fourth month, 3 months back, that's one issue. Going forward, the other issue is, as you said, it may affect what goes on in the future, because if you couldn't pay, why can you pay now? But the underlying thing of all this, because pretty much under any scenario, and correct me if I'm wrong, any of these scenarios, credit is still an underlying issue for both homes and life, right? I mean, mortgage, anything you need. You can't even get insurance without a credit check. So how do you think this is going to affect, and again, I know you're not a credit expert, but in your experience in the industry, how do you see this affecting a person's personal credit hereafter?
All right. Great question. And I will say I am not a credit expert. I'm not licensed to be a credit expert. I'm a licensed mortgage loan originator. So I'm just talking off opinion for the moment. Okay. I just got to put that out there. But having said that, we don't have that crystal ball. No one has seen this previously. So do we know that they're going to report you late when they say they're not on the forbearance? I hope that every lender out there stays true to what they put in their letters. I'd get everything in writing. And let's just go with the fact that they stay true. But if they don't, one late payment on your mortgage can drop your credit score anywhere from 25 to 50 points. It's a big range, but I don't know exactly the number. So
that's huge. That's still big.
So listen, you have a 700 FICO score, you one late payment. If they report it late, you're down to a 675. You have 2 late payments, you're down to 650. By the third and the forbearance being over, you're down to 6.25 from a 700, when the lending institution said that you didn't have to make mortgage payments for the 3 months, and you just thought it was just okay. That's why I'm saying to everybody who's watching tonight, if you can make your payment, make it, because it could have an adverse effect. We don't know yet. I'm going to go with the notion that every lender's not going to report you late, and they're going to stay true to their word. But one late payment, and then the other half of it is that when you have late payments, if they are reported on your mortgage, and then they're reported on your credit report, you go do a new purchase. You go do a refinance 3 months down the road, 6 months down the road, a year down, well, maybe not a year, but it could be a year. But okay, anywhere down the road for that sake. Anthony, what that can do is that if they do report it late, God forbid, you're in a position where the mortgage lending institution is going to say, well, you had 3 late payments.
Right.
Back in, April, May, and June. And then your answer is, oh, well, they told me I didn't have to pay, and I had a forbearance agreement, but it's already reported on your credit report. So it's a very fine line that you got to walk with that. If you ask me, I had the money to pay. I'm earning an income. I'm earning a paycheck. I'm making my mortgage payment. I don't want to have to deal with this at the end, nor am I in a position where do I want to write 4 mortgage payments in one shot come July 1st.
Right. That's crazy. Just thinking about that makes me a little nauseous.
You still got to pay it. So it's not like you're getting away with it. Yeah.
But when they first said you could put it on the back end, that even me, that sounded great. I'm like, you know what? What do I care?
And then, don't get me wrong. To be clear, there could be lending institutions that may allow you to renegotiate those terms come in July. So I can't speak about them now.
And I get it, lender by lender. But the majority of them are going to do what you said, because I've heard and seen people who have made these inquiries, and that's what they were told. I mean, because it makes sense. So now you got 4 months worth of mortgage due, and it's going to adversely. I mean, I know you can't say it, and I'm not an expert either, but we know it's going to adversely affect your credit in some respect. It has to. You can't apply for a library card with a 600 credit score. What are you going to do?
You can't. And if the FICO score goes down, we got to hope that everything that they're saying is going to hold true. But again, everybody, it's hope. So just,
so much they do to bail us out too, right? So
what happened?
If you could afford to pay it, it may be very difficult, but do it because A, it's the right thing to do. And B, you may be doing something you consider a luxury today to have an extra $3,000, $4,000, $5,000 a month in your pocket, but it'll cost you the ability to get a new home in the future or anything related to credit, get a new car, etc.
Yeah, and if you're not going to make the payment, and if that's the decision that you already made and you're in forbearance, just make sure you have it in writing. It's all I ask everybody to do. I'm all about, all right, you're saying I don't have to make the payment. You're saying you're not going to report any late payments against my credit. Prove it to me.
Right.
Trust, but verify, right? Get that verification from the lending institution.
All right. So now you have, first of all, this is great information. So thank you. This is
thank you, buddy.
I try not to look at the comments like I told you before, but
I haven't looked at one. So
I will get to the comments. And again, we encourage anyone who is watching live, first of all, thank you. But anyone who is watching, please ask any questions that you have related to the topics we're discussing. But I want to go into something I'm excited about because it's a COVID Talks exclusive, right? So tell us about what you and your team and everyone at the bank has been working on, this special program for first responders, and kind of lay it out for us.
Yeah. So this evening we're going to announce, and we've been working on it for a little bit now. We wanted to put something together to thank our first responders, and first and foremost from myself, from First Home Bank. We thank all the first responders that are out there that are helping all those individuals that are unfortunately caught this virus or have maybe passed away from the virus. So thank you all. But we wanted to put a program out there for all those first responders, and we have set that, those guidelines have been set forth for us, and I'm happy to announce that tonight so I can let you all know. So we have a first responders closing cost incentive program from First Home Bank. It's a lender credit of up to $1,690, and that would cover the bank fees, which are the application fee of $795 and the commitment fee of $895. So together that equals the $690. So we're waiving the bank fees as a lender credit upon closing. So that's something that I'm excited about, something that we're able to give back to those that are giving back to our community.
And I love it, and I'm happy you announced it here. Made my day.
Listen, Ed, what other place would I announce it other than COVID Talks?
Very, very humbled that you would even consider us to do this. But so here's a pointed question, right? Because again, I'm just a regular guy. Define, if you can, first responder. So before you do that, though, I'm sorry. Up on the screen, we have how to contact Mike directly. His email address is there. We're also going to put his email address in the comments. I'm going to do that while Mike's explaining it. But please feel free to reach out to Mike with any questions that you have. I know from personal experience, he will get back to you. He will answer you and do everything he can to help you. So we will put that in the comments while Mike is explaining the definition of what first responder means, right?
Yep. So, thank you. We do have to define that, right? So I will define who is eligible for the first responders closing cost incentive from First Home Bank. And you got nurses, doctors, EMS workers, firemen, firewomen, and police officers. So that's the definition from our lending institution. And that's who will be able to obtain the closing cost incentive of $1,690 off closing cost from First Home Bank. So I'm excited about that. It's great news.
And is there a I don't know, like a time limit? Like, does this expire? How long are you going to hold this, do you think?
So in getting into this call, we don't have an exact time limit. I do have to say that there's probably going to be a time limit to it, but I don't want to disclose something I'm just unaware of at the moment. But
it's like everything else. Act now. We know the promotions here. Share it with your friends and family members who are out there fighting for us. Spread the word, because right now, as you said, there are people who are still looking to purchase a home. It is what it is. Forget about the climate. And these guys and gals who are out there, first responders, deserve the world. I mean, I know every organization is going above and beyond. It's my first experience with a lending institution that's actually doing something to give back. So, shout out to the bank itself. And
without a doubt. One thing. So the only thing I have to put out there is that it starts on May 1st. So that's when we're rolling it out. So it's just we're getting ahead of it with this call.
That's
but
like
May 1st. Yeah, you're right. Exactly.
Okay, it is tomorrow.
Friday.
Right.
But
So
that's
you
when
got
we're
that
starting.
ad. So again, check out the comments.
I'm going to do
Email
that
Mike.
now.
No, not you.
Not me.
No,
All right.
People watching, look at the comments. We put the email in there. Get in touch with Mike directly. You can email him. He'll be more than happy to answer any of your questions. If you have any first responders in your family that you may know, or if you yourself are a first responder, just get the information, right? It's free of charge for Mike to talk to you and explain how the program works. Take advantage of it and then sit on it. Make an educated decision. You don't have to act immediately, but if you have the wherewithal to be in the market right now and you could take advantage of a way to save money, I recommend at the very least just reach out to Mike and get the information. So Mike, this is where we're going to take that quick pause I mentioned earlier. So anyone who's watching, now is the time. We encourage you to type into the comment field any questions that you may have. If we have intelligent comments, we will put them up. And in the meantime, we are going to segue into what we do every night, and we're going to segue into our COVID Talks Hero of the Day. And this evening, the COVID Talks Hero of the Day is not one individual. So it is a group of individuals. It is a group of individuals who, unfortunately, and I say unfortunately because I myself fall into the category, unfortunately doesn't always get thought of as first responder, doesn't always get thought of as being out there, and sometimes, quite frankly, just get taken for granted. Let's call it what it is. We were fortunate enough in the early episodes of this series to have Danny Casella with us of the Amalgamated Transit Union. And he basically told us that, these guys and girls are out there every day in the midst of the virus, and they are bringing people to and from locations, and they are out there and they're exposed. So the hero of the day today is an all-encompassing genre of MTA transit workers, Amalgamated Transit Union guys, the guys and gals driving the express buses. In Manhattan, the subways are still operational. These people are out there every day. They may not be as crowded. The express bus going into Manhattan from Staten Island may not have 70 people standing room only, but whoever's on that bus, they got to think about the individual driving it. And they have to be conscious of the fact that they're taking you to a destination at the risk of getting infected themselves. So a huge shout out to all of our transit workers, the MTA. Thank you for all you guys do. All right. So Mike, this is always the dicey part. All right. So anything can happen at this point in the show. So we're going to go to the comment section. You could go to the comment section too.
Drum roll.
Yeah, we're going to go and see. We'll see what we got. All right. So we're going to pull up just a nice.
I'm gonna let you do what you got to do.
First thing we're going to do while I'm scanning through the comments is I'm going to give a shout out to Marco. Marco, what's up, brother?
What's up, Marco?
Marco gave you a nice shout out. I used Mike when I purchased my home in New Jersey.
Thank you.
It is so simple and absolutely rocked. Mike Scarimbolo, you're the man.
Thanks, Marco. Appreciate you, man.
We got another one
as
from
well.
Family member. This is not, we're not picking favorites here, but Frank Rapp. Mike did a great job getting my mortgage. We closed just before the shutdown, luckily. Would highly recommend to anyone looking for a mortgage. Awesome.
Thank you, Frankie. Appreciate you, man. Hope all is well.
Oh, look at this. Ia, how are you? Michael was my mortgage broker. He was excellent. You got a lot of fans out there, bro.
Hi, Maria. How are you? Hope all is well. Thank you.
I did neglect. Shout out to Vito Canena. Mike, this is one of our best fans. He's on every day. He sends us great guests. Vito, we love you, brother. You're going to be on soon. We got to figure out when you're coming on. But thank you for always watching and listening. We appreciate it.
How are you?
I'm going to go up because there were questions earlier that I saw. I mean, outside the shout outs, of course. The shout outs are great, Mike, because that's a testament to your person, your personality, your character, and what your business is about. But I'm looking to see because I think we do have I think we had one that I skimmed over earlier, and I said in my mind, okay, so let's see. Celia, our friend Celia has one. We're going to put it up.
Okay.
Let's see. It's long. When you refinance, even though you're saving money monthly, and do I don't know what a SEMA is.
SEMA, yep. I'll get into that. Go ahead.
Doesn't it take approximately 5 to 7 years to recoup from the money it costs to refinance? It's great if you have plans to live in the home for a long time. Am I correct?
So first off, Celia, how are you? I hope all is well. I hope
did Celia just stump us? Is that what she did?
Nah, she did not stump me. She knows
Celia's the best.
She knows what to ask me, and she knows that I have the answer behind that. So
good.
At the end of the day, a SEMA is really only something that's done in 3 different states. And New York is one of them. If we're talking about, if we have the viewers in the tri-state area, New Jersey and Connecticut don't have mortgage tax. New York City, New York State, we have mortgage tax here. So a SEMA is when you assign the mortgage tax from the lender that you're currently with to the new lender. Let's just say myself, right? Okay. You're assigning that mortgage tax over, and the city and state allow you to do that. And what that is that mortgage tax is 1.8% for every for a loan borrowed under $500,000. Forgive me, and 1.9% of a loan borrowed over $500,000. So you're saving almost 2% in assigning that mortgage from Bank A to Bank B upon a refinance. And why is that important? Because that keeps your closing costs low. That also allows you to not pay a fee back to the city and state of New York that you don't have to pay. Why pay something you already paid? The SEMA allows you to do that. CEMA, and you're going to stump me on the acronym. It's Consolidated, I think, Edification Modification Agreement. Forgive me, I know I chopped that up for.
Just throw some big words together.
It sounds good. So something, blah, blah, blah. It's a modification agreement. You're assigning the mortgage tax from Bank A to Bank B to save in closing costs, to save on that mortgage tax. So Celia's question here, as I'm reading again, as when you do a refinance, saving money monthly, and doesn't a SEMA take approximately 5 to 7 years to recoup from the money it costs to refinance? No, I don't believe it takes 5 to 7 years. I feel like that's too long. And if it takes that long to recoup that money, Celia, it doesn't make sense if you're going to stay in the property short term to do a refinance. What I'm seeing more likely for clients that were doing refinances with the SEMA, which if you come to me, you're doing a SEMA on any New York transaction for the most part, unless your loan amount's too low and you don't want to have to do the SEMA and wait, because there is a long time frame, anywhere from 30 to could be up to 90 days to wait for the documentation to come in from your current lender. So it is a time constraint. But Celia, no, I'm not seeing 5 to 7 years of recoup. A recoup is going to be a lot sooner than that. Recoup of the cost to close, I think, is what you're talking about with the SEMA. You want it to be more like 2 to 3 years, if not 4 years at the very most. And on average, that's about what it is. So it's a little sooner than what you said, but I like where you went with that.
Cool. So that was interesting because you totally lost me with everything you just said, and I'm just going to everything you just said sounded very intelligent.
Yeah.
So we are going to close out the comment section. I just want to give a quick shout out. I'm going to bring it up on the screen, and hopefully through the beauty of technology, I want to see if I can get this done. But I want to give a shout out to Carmine Gualtieri, a friend of mine. He is a great restaurateur here on Staten Island.
Absolutely.
He was nice enough to be on the show with us about a week ago. And if I can get this to work, I actually texted him last night and I told him that he is a genius, because he is. But what they've done at Richmond Republic is, because of, as we know, we're reading every day, right, that there's a shortage of Chinese food. I mean, it's funny to even think that right now in the midst of all this, that's something that people are talking about, but they are. And what was Carmine's answer? Immediately after seeing that there's this mad dash because people aren't able to get Chinese or Asian food delivered as readily available as it used to be, because a lot of them are shut down. Carmine has his Asian special. So check it out. Go visit him at Richmond Republic. You can check him out on Facebook. You can learn more about the details, learn more about the specials, learn more about the restaurant and the properties. But I just wanted to give him a quick shout out because, again, the guy turns on the flip of a dime.
Without a doubt. He's out there. Without a doubt. Carmine, good people. Definitely. Craig, good people. Mike over there, good people. We ordered from you guys last week. Great food. Came on time. They said within the hour, came within the hour, and right now within the hour is fantastic. So
yeah, everything that happens, he's like, he gets to it before it happens, and he's out there in front doing it. And the last thing before we close the segment, I just want to put up a post. I'm going to put this in the comment section. So I was fortunate enough to have been interviewed by a friend of mine from a while back. You may remember Patty Murphy from New York One. She no longer works with the news station. She's now a part of a brand new publication. So what I'm going to do is I'm going to try and bring it up on the screen here because it's really nice. It's a really nice website. It's a great way to get new information. It's called, hold on, Chrome tab. Here we go. So it's called SINY Live. On si.nyc. So onsi.nyc is a new resource that was recently put together by professionals in the field. We're talking former journalists here, putting out great content. I was fortunate that she asked me to be interviewed. They wrote a beautiful piece about COVID talks. So Patty, thank you so much. I appreciate it. But it's not a shameless plug. This is just to alert people who are watching or listening later on. Visit the site, because right now we're in a period where things are going to be coming up. People are going to be reinventing. We know all this. But right now, here's a real life example of a new outlet for people to look for fresh information, up-to-date information, positive news, and news you can use. So I posted it in the comments. And again, I invite you to check it out and learn what they're all about and see for yourself, because again, it's a great resource.
That's awesome.
All right. So with that, we are going to thank my friend, Mike Scarimbolo. I appreciate you being here. I appreciate you dispelling some of the rumors. I would probably say that your information that you just gave was at the top of the list of anyone we've had on the show, because everything you spoke about is actually fact, and it's also occurring right now.
Yeah.
You gave some information on how to help people dealing with issues, how people can prevent bad things from happening in the future. And you also announced that great initiative for first responders. So again, check out the comments, guys. Email Mike. Mike will be more than happy to get in touch with you, free of charge. Reach out to him. He'll give you his ear. I know he will, because he's that kind of a guy. He'll help get you through any situation you need. So Mike, I'm going to bring you down to the green room. I'll be right back. We're going to do the
Thank you,
outro.
everybody. Appreciate it.
See you soon. Thanks for being with us. All right, guys. So great night. A lot of positive conversation coming out of that. We actually ran over. We're about 10 minutes over what we usually do, because Mike brought such value to tonight's cast. So I really thank him for being with us. Just quickly before we close, I want to invite everybody and remind everybody that tomorrow night at 7 p.m., we're going to have Renee Sarno with us. Renee is a legend in many ways, but one of the hats that she wears is she's a representative for Yaymaker. Yaymaker has all kinds of opportunities for virtual events, all kinds of stuff that you could do online, at home, safely, and have a great time with friends and family. So she'll be with us tomorrow night. We're looking forward to that. And we confirmed, as I said at the beginning of the cast, we're honored and privileged to have with us next Wednesday night Miss Linda Barron, president of the Staten Island Chamber of Commerce. We're looking forward to having her on. That's going to be a great cast, because we're going to be talking about all kinds of things the chamber is doing for small businesses, even non-members of the chamber. They're offering free assistance. They're offering free services. They're doing everything in their power to support Staten Island's economy during this time of need. And we are looking forward to having her with us. So once again, I'm Anthony Rapp from PR Cision. Appreciate you watching, appreciate you listening. This was COVID Talks, positive conversations during uncertain times. We'll see you tomorrow.